Hey everyone, I just wanted to make a quick video today on this DR and IDR stuff. If you're not familiar with the concept, I'm going to link a video in the description on the topic. But if we were to break down that video very simply, I would say that the key takeaway from the video is this supposed 88% probability that when price closes above the DR or defining range, that the low of the day is in. And I believe this is for the S&P 500 specifically. And what the defining range is the first hour of price action. So I'm on a 5-minute chart right here. This box outlines the first hour of price action. And so the gray lines below and up top mark the high and low of the session. And the green dashed line right here and above just mark the high and low of the candle bodies in that range. So the idea is that when price finally closes above this DR high, that the low of the day is in 88% of the time. And vice versa, if price closes below the DR, then supposedly there's an 88% probability that the high of the day is in and price will remain below this point right here. So the reason I wanted to make this video is really just because of the 88% claim that was made in the video. You know, I figure with anything like that, if you intend to use it in your own trading, you should 1000% be collecting those backtest results for yourself. Not to say that the source isn't trustworthy or whatever, but obviously when you say something works, upwards of 90% of the time, you want to make sure that those claims are actually true before you go ahead and use it. So that was the whole reason why I wanted to code my own indicator right here so that I could automatically collect some tests and see what the actual success rate is over a certain amount of sessions. And I'm also not trying to debunk any of this stuff in any way. I'm really just wanted to show the importance of collecting your own statistics, and I'm going to walk through this script. I'm going to leave it open source for anyone that wants to do some more advanced stuff and maybe collect some more statistics that might be relevant to how you might want to apply this in trading. And obviously, for the amount of testing that I have could be significantly different than what has been shown in the video in the description. 237 market sessions is pretty much just shy of 1 year. There's 252 trading days in a year. And this 88% could extend back to 5, 10, 20 years from now. I don't know that to be certain. But again, I'm just showing how you could kind of create something to verify all this stuff yourself. So just to walk through some examples of this concept, you see we have outlined the first hour of price action. Price closes through the DR high and remains above it for the remainder of the session. And these green tags are essentially how I'm determining the success criteria that is populating in here. So if price closes above this level and this low of the day is not broken, then that is a successful DR session. Now, an example of where this failed is that this was the first hour session, price chopped around for a while. It closed below the DR right here, but then eventually ran the high of the day, so the DR high was not held. So this might have been discussed in a separate video from the one that I linked, but I believe another form of the rule is that, if price closes through the DR high, then it should not close below the low of the day, rather than just taking the low of the day altogether. So I did add another option in here for the DR success criteria. So right now it's set to wick, in which case if price closes through the DR high and breaks the low of the day in any form and just like closes back through it and doesn't close below, that would count as a unsuccessful DR session. But if you put this to close instead, then price never closed below this level, and that would be marked as a successful session. And obviously with the addition of that criteria, you have the success rate going up a little bit. So now we're on the NASDAQ futures, and we can see that DR has a success rate of 83% over the last year or so. And that is with a success criteria of close. So price never closed below the low of the day after breaking the DR high, or vice versa. If we set this to wick, then the DR success rate is only about 75%. And some interesting ones I found when I was just looking through different symbols. Surprisingly, wheat futures has a insanely high success rate, and also I believe it was corn futures. Yeah, with a 88% success rate. It also applies to stocks as well, of course. So, Tesla, 91% success rate. I think AMC had something ridiculous, like a 95% success rate. But this alone isn't something to have a trading strategy based off of. You obviously need a plan for different entry techniques and everything. So it could just be another potential addition to determine bias for the day. Say your bias is unclear for the day. And again, ICT has said that you don't need to have a bias for every single day. Not every day is going to provide high probability opportunities, especially if the higher time frames are just chopping around, not really in any points of interest. But if you know that if price closes above or below the DR, that the high of the day or low of the day is in 90% of the time, then that could just give you some confidence to potentially look to take a trade in continuation of where price originally broke the DR. And obviously you could also apply some ICT concepts for entry methods. So you have a fair value gap right here, just before this break of structure. And what's also interesting is that not only does price find support at this IDR high, but also you have what looks to be an order block right here. And the IDR high pretty much lines up with the mean threshold of this order block. So that could provide an entry on a pullback. But again, I think it should be made pretty clear that this is not some sort of, buy and hold strategy. The rule is not that if price closes above the DR high, it will remain above this point for the end of the session. It's that if it closes above this high, it should not close below this low. And so that's a lot of room for price to travel in order for this to be invalidated. So that's not to say that price cannot end up back in this range at the end of the day. And that could actually be, a good statistic to collect and add to this table is that when price closes above the DR high, how often does the session actually close above that point? Maybe there's even some correlation between that and something like the days of the week. So if, on Tuesday and Thursday, for example, if price closes above the DR high, there's I'm just making this up, but, there's an 80% probability that price closes higher than the level where price closed above the DR high or something like that. So I think that there's definitely a lot that could be added to this to make it more significant to develop a trading strategy around. But at this point, I'm just going to walk through the script a little bit just so you kind of understand what's going on and can modify it however you want to, collect your own data. So if you've never written in PineScript before, these are all my inputs right here. So when you open up the strategy settings, this is defining all the settings that you can tweak right here. So the time frame to be used is 5 minutes. I believe that's pretty constant. The DR range, so the one I'm primarily concerned about, is 9:30 to 10:30, so New York Open. There are some other ones, but I'm just testing this one right now. You can obviously change it however you want. And I just named this the DR extension. So basically the remainder of the session that you're checking to see if the DR succeeded or did not. So if you were to change this to something like 12 o'clock, then that would be checking if price closed above the DR high before 10:30, does the low of the day get broken before 12 o'clock? And obviously that would be likely improbable. So you can see this, the success rate of price staying above the low of the day if it breaks the DR high is 98%. And DR success criteria I kind of explained earlier. So you could set this to close so that if price wicks through this low but cannot close below, then that still counts as a successful DR session. And the rest of this just applies to the styling of the indicator. So we have all that, have a couple variables set up to tell whether the DR is currently broken or not, and setting our DR and IDR lines, as well as the box that covers the first hour of price action. These variables I'm just using to track the current low of the day and high of the day, and also the close low of the day and close high of the day. So I'm checking the candle bodies for the close criteria. So DR time, again, this is our 9:30 to 10:30 range. And basically this will be true when this is not NA. So basically, as long as price is between 9:30 and 10:30, this will be true. And likewise, this extension, if price is after 10:30 and before 4 p.m. New York market close, then this will also be true. Now, this is, again, just the styling stuff, but for anyone interested, these switch statements just make it a little easier to handle some styling stuff from the inputs rather than having, if style equals solid, then line style dot solid, else if blah, blah, blah. I'm reassigning the value of the DR style to be equal to one of these things based on whether the current style right here. So if I'm using this DR style, that is this line and this line right here, if I change that to dashed, then these will turn into dashed. And the reason it does that is because when I'm assigning this, it's checking, oh, I selected dashed, so I'm going to be using line.style dashed. And if we look at where this is applied later on, I'm using that style right here. Same for the table position. And then again, so that DR time frame where I said that we were going to be using the 5-minute time frame, which is pretty constant in the videos that I linked, I'm getting the OH, the open, high, low, and close data from that specific time frame, no matter whether or not we're on a different chart. So if it's 9:30, then DR time will be true, and the bar before that will be false. So at 9:25, the market hasn't opened yet, and so we will only enter this if statement on the first bar of the market open. So I'm going to reset DR not broken equal to true. I'm going to initiate our low and high of the day, and also going to start drawing our DR and IDR lines, as well as the box that encompasses the first hour of price action. So now again, we initiated all these lines, so if they exist, then we will enter this statement. So at any point during the DR session, whether we're in 9:30 to 10:30 or 10:30 to 4 p.m., I want to be extending these lines to the current bar index and also just updating the high and low of the day as we go. But if we are in that 9:30 to 10:30 session, then I want to be checking if we made new highs and lows, in which case I would have to just move the DR lines. So if the high from our 5-minute time frame is greater than the current DR high line, I'm just going to reset our lines to be equal to that high. And same for every other line on that chart. Now I'm going to check if the DR was actually broken. So I'm going to be looking for a 5-minute close through the DR high or DR low. I'm setting a couple variables for myself, break high and break low, both equal to false right now. So if DR extension, so if we're in between that 10:30 to 4 o'clock period and we haven't broken the DR yet, then I'm going to enter this statement. And I'm going to check if the 5-minute time frame has closed above the DR high. If we have, then I'm going to set break high equal to true and DR not broken equal to false. Likewise, if we close below the DR low, then break low is true, and DR not broken is equal to false again. So this part is where I'm setting these blue close through DR high and close through DR low labels. So if we broke the DR high, then I'm setting this at the point where we close through the DR high. And if we broke the low, I'm going to be making a label that price closed through the DR low. So this is the part where we're actually checking if the DR rule succeeded for that session, and we're actually organizing all these statistics. But I want to make this point clear that the claimed 88% success rate from the video I linked is partially due to the fact that it's only accounting for days where there are not any high impact news drivers. So anything like NFP, FOMC, stuff like that is supposedly not counting for those days. So I'm just making that clear that I am not accounting for those days in this indicator. I'm checking every single day, no matter what the news is or whatever. I'm not sure if there are ways for you to filter that out. I mean, you could definitely do something like NFP, since that is, I believe, the first Monday of every month. So you should be able to code something like that in there. But for days like FOMC, I don't know how you're going to keep track of all that stuff. So I just included every single day just so we could see all the statistics. So right here, I'm kind of checking if we broke the DR high or broke the DR low. So if break high was set to true more recently than break low, then I know that more recently we broke the high. So in either case where we break the high or break the low, we're setting DR not broken equal to false because we closed outside of the range. So if that is false and the session has closed, and the reason it means this is because the DR extension is only valid from 10:30 to 4 p.m. So at 4:05, the DR extension would not be true, but at 4 o'clock, 1 bar before that, it would be true. So this condition right here just tells me that we're at the end of the day. So if we did break the DR high, then for my success criteria, I want to check, are we using wick or close? So if we're using wick, then we want to be tracking the low of the day. And if we're using close, we would want to be using this close low of the day. So in order to check if the DR session succeeded, if we broke the DR high, then we want to be checking if we broke the DR low at any point during the day. So this ruling criteria will give us the low of the day that we're tracking, whether it's the regular low of the day or the closed low of the day. And we're seeing if that is less than the DR low of the day. This should actually be less than and not less than or equal to. And here I'm just assigning the label string to say whether the DR low was held or not held. If the ruling was true, then we can say that the DR low held. If not, then the label will say DR low not held. And I'm going to track that in our track total variable, where if you remember where it was defined previously, was this var int track total. Specifying this var keyword here, just make sure that this is only initiated once. Whereas if you had something like track total equals 0, then for every new bar on the chart, it's going to be rerunning this code and track total is going to be reset to 0. So you can't really track anything like that if it's just going to reset on you. But if you only initiate it once, then you'll be able to just increment it over time and it will not get reset unless you reset it manually. So I'm making track total equal to track total plus 1. Then if the ruling was true, if the DR session was successful, in other words, then I want to be tracking that as well. And that is how we generate our success rate. Otherwise, if we broke the DR low, we're just going through the same process in reverse. If we're using wick, we're checking high of the day. If we're using close, then we want to be using the close high of the day. And we're just checking to see if that high of the day is greater than the DR high. Same thing, we're just going to generate a label for it, record the session, and also record the ruling. And we're just going to make a table. And so we're not running this on every bar. We're just going to say if bar state equals last, we're going to have DR success rate. And then to the column to the right of it, we're going to have the percentage of time that the DR rule succeeded. How many times our ruling was successful over the total number that were tracked. And we can also just throw in the total sessions right here just so we can see how far this was tested back. So like I said, this is going to be open source if you want to check it out. The link is going to be in the description. And again, some things you could kind of track yourself is, when price closes above this DR high, how often is the remainder of the session closing above that point, and vice versa. And if you're looking at how to kind of make an entry model out of this, you could see maybe, in these instances where the DR acts as, support or resistance, So you could say something like, if we've already closed through the DR and we have a candle of this type, so, the open and the close are both below the midline of the candle, and the high of the candle is, within some small percent value of the DR low, maybe that could be a valid rejection criteria for you to track and see how successful that is. And obviously there's many directions you could take this. I just wanted to share what I made to be kind of proactive in collecting your own data, especially in trading where an edge is so important. You don't want to just blindly trust someone else, no matter who it is. I think it's a great exercise to collect that data yourself and see how often it actually works. And, like I was showing before, you could just try some different symbols and see if it works in different markets a little better and all that. But I hope this was useful. I will probably be leaning into more of these coding type videos since that is predominantly what I spend my time doing nowadays. If you have any questions, please feel free to leave a comment or message me on Twitter or the Stat Discord, wherever you can find me. That's all I have for now, and I'll see you in the next one.